All right. Well, with an increased number of economists saying the U.S. is headed back into recession, consumer confidence plunging to the lowest level in more than 2 years, and new jobs numbers out Friday expected to disappoint, the president is out talking jobs and investment. He's pushing to extend some bills set to expire next month. Here's what he's saying about them.
That's what we're going to need to do in the short term. Keep people on the job, keep vital projects moving forward, fund projects that are already underway in a smarter way. Of course, if we're honest, we also know that when it comes to our nation's infrastructure, our roads, our railways, mass transit, airports, we shouldn't just be playing patch-up or catch-up. We should be leading the world.
All right, well, you can give a speech, but in reality, Obama and Congress have failed to deliver so far, with 2 years of around 9% unemployment. Likely a bigger deal next month. What we could see in September, what we're hearing more and more about, is that the Fed may be the one to act again with another round of quantitative easing. Now, the Federal Reserve Bank of Atlanta, an official there, is saying the Fed should consider it. On Wall Street, JP Morgan is calling for it, saying they think it's coming in September. Goldman Sachs thinks it's coming too. Federal Reserve minutes also show that they came this close in August. But just who would this help? Now, we know that quantitative easing has helped Wall Street because it's boosted the equity market and created a demand for treasuries already on their books. And it's also helped the federal government because it's allowed them to borrow at an extremely low price because it pushes down the yields on treasuries. But what would this do for everyone else, for millions of jobless Americans afraid or too broke to spend, underwater on their mortgages, or for small businesses, which Ben Bernanke says still can't get loans? Well, here to help us answer that is Lew Rockwell. He is chairman of the Ludwig von Mises Institute. Thank you so much for being here. It's nice to see you again. Mr.
Lauren,
Rockwell,
great to be with you.
Absolutely. You know, we know that quantitative easing in the past has helped Wall Street and certainly the federal government in Washington. But how has it helped everyone else, just average folks who are broke and jobless?
Well, it takes a hammer and hits them in the head is what it does. We're still in a recession. There's not been a recovery. One of the reasons is because what the government is doing, what the Federal Reserve is doing to hold down interest rates so low, as you say, to benefit the federal government, to benefit places like Goldman Sachs and JP Morgan. And just like Europe is being raked over the coals to the benefit of the big banks, so are Americans. So the average Joe, the average Janet is being harmed to the benefit of the power elite. So what is quantitative easing? It's money printing. And they print up this money, and it has a horrendous effect on the economy. And we're already starting to see prices increase. I've noticed clothing, food, many other areas, prices are going up and up already. We stand to face really a hyperinflation worse than what happened in the 1970s. I don't think they're going to put us in the Zimbabwe category, but you know, we really can't know. Bernanke is like the mad printer, and he's doing it again for Wall Street, for the big banks, for the government, and to the detriment of the American people and really the people of the whole world. This is a criminal act that they're contemplating.
So just to confirm, another round of QE, QE3, would just help Wall Street and just help the government?
That's right, and it puts the boot on the throat of the average person. So not only does it just help the well-connected, but it's a deliberate knock in the head to working people, to people who are out of jobs, and all the various things they're considering, you know, infrastructure spending and so forth, would also be bad. I mean, it's true that the infrastructure is in bad shape. It's all owned by the government. The government has messed up the infrastructure. So, of course, the answer is always when the government is fallen flat on its face, we're supposed to give them more power and more money. Instead, of course, we have to privatize the infrastructure. Private owners take care of their property. Government, quote-unquote, owners just, you know, they ruin the property that's in their charge.
And I want to get to that, but I just want to make sure that people understand and that I'm clear on, for example, just one way to illustrate how QE helps Wall Street. If everyone on Wall Street knows that there's going to be more QE, if I'm Goldman Sachs or another big bank who's calling for this, and I know the government is going to be doing QE, buying treasuries, can't I go buy them ahead of time and then sell them back to the Federal Reserve and make money on the deal?
Oh, sure. And not only that, we have to remember that the original QE, which was the TARP program, and probably subsequent actions of the Federal Reserve, meant hundreds of billions of dollars for the big banks on Wall Street. I mean, they got actual payoffs from the government. So one of the ways they benefit is the Federal Reserve prints up the dough and ships it on pallets, in effect, over to the big banks and the big Wall Street firms. So it's a direct payoff to them through printing. I mean, it's through counterfeiting. It's what's called in the private sector counterfeiting, and it's a crime. When the government does it, and it's exactly the same thing as counterfeiting, although far more damaging than private counterfeiting, they call it QE.
And you say counterfeiting. The Fed says this is what the economy needs in order for banks to have cash to lend. But my question to you is, if the Fed really wanted banks to lend, why would they be paying banks not to lend by paying them interest on their reserves?
Well, they're trying to prevent hyperinflation by doing that. But you know, we actually don't want banks lending. There's too much debt in this society. There's too much government debt. There's too much private debt. People have accumulated vast amounts of debt, mortgage debt, and so forth. Part of the problem we have is there's too much debt. We need less lending. We need fewer banks. We need fewer Wall Street firms. The whole financial structure has been ballooned by the Federal Reserve way out of proportion to the rest of the economy. We need to puncture the balloon. So we don't want more lending. We want far less lending.
And I just want to show our viewers just how much money that banks are keeping at the Fed. I want to show how much it's increased since they started paying interest on reserves there during the financial crisis. If you can see, that blue line has just skyrocketed since the financial crisis. It's increased about 1,000 times if we're doing our math right. So they're holding a lot of money.
And it's another ripoff for the banks. So the Fed prints up the money, the banks get it, then they get interest payments on it, and this is a lot of these banks, this makes their profit, makes the difference between profit and loss. So this whole program is another payoff to the big banks. We live in some kind of bankocracy here and in Western Europe. The banks are driving the rest of the economy, the rest of the people into the ground. We need something different. Terrible that Merkel is doing what she's doing in Germany, terrible what Obama is doing in this country. They might as well just be employees of the banks, Deutsche Bank or Goldman Sachs or whatever. We need a very different kind of system. We don't need the banks running our countries. We need to overthrow the banks, as a matter of fact.
And you know, there's a new report just out that I want to ask you if you think is a result of exactly what you're talking about. It shows that at least 25 top U.S. companies paid more to their CEOs in 2010 than they did to the federal government in taxes. How are CEOs being paid so much more at a time when the economy is this bad?
You know, this actually goes back to earlier government interventions that protected management from stockholders and made it so difficult for so-called, for people to buy up the stock and take over a company and toss out bad management. That's very, very difficult these days because of the big companies and the government got together to prevent it. So one of the results of this is all management of these big companies is paid too much. The CEOs are paid too much, way out of the market category. What we want to do is make it possible for the Michael Milkens of the world to have so-called hostile takeovers, that is, pay stockholders the price they want to get for their stocks, take over the companies, toss out the old line management, and put new, and we would hope, better management in, and especially not have these rip-off salaries for these CEOs who are going to part of the power elite. They're like the big banks on Wall Street or the big banks in New York and so forth. These are people who are in cahoots with the government, running the rest of us, ripping the rest of us off.
So then is this a symptom of exactly what you're talking about, a new system of socialism, but just for the rich, where the risks are bailed or backed by the federal government, but all the rewards are still reaped by corporations, banks, and rich investors?
Oh, sure, and I mean, that's right. The rest of us live in capitalism, which is a good thing. To some extent, we don't have a laissez-faire economy, unfortunately. But there's certainly no bailouts for the average person. Nobody gets bailed out on their mortgage or whatever, no matter what they talk about. But there are, of course, bailouts for the big boys, for the people who are actually running the country, the power elite, the big corporations, the government itself, the military-industrial complex, the banks, all the rest of the rip-off artists. So, yeah, we need a very different kind of system. This is, I would argue, this is a soft fascism where we have big government and big companies joining together to step on the rest of us. It's not a good system politically, morally, economically, or in any other way.
And yet, in many ways, it's all, you could argue, all financed by taxpayers and by countries like China. But one thing that sticks out to us is that China is now giving a break to their people on income tax, and 60 million people will be totally exempt. Most, except for the top earners, will have a big cut to their income tax. This begins tomorrow. The government is trying to boost poor people's spending in their country. I'm wondering if you think this is a sign that China is realizing the costs of subsidizing the American economy outweigh the benefits and are instead trying to promote domestic consumption.
Well, I think it's wonderful that they're cutting taxes. Already Chinese taxes were nowhere near as high as American taxes, for example, on companies or on individuals. I feel bad for China that they got stuck with all this U.S. Treasury debt. I don't know what quite is going to happen to that. But I hope China opens up things even more economically. The period from the death of Mao Zedong to the present has to be the biggest, fastest increase in economic prosperity and freedom in the history of the world, so far as I know, what's happened in China. So they've got a ways to go, but the trend line is certainly very good. It's towards freedom, towards capitalism, where the United States, where there's huge resentment of China and huge military envy of China, is going in the opposite direction.
So we're almost out of time, but I'm just curious, yes or no, should the U.S. take a cue from China on the way they're running their economy, for example, with that income tax thing?
Oh, yeah. I mean, the more that we can, the shorthand for taxes is wealth destruction. So do we want less wealth destruction in the United States and in every place in the world? Yeah, we do.
All right, well, we're going to have to leave it at that, but you certainly think that quantitative easing would be more wealth destruction for average folks across this country.
Absolutely.
Just not for Wall Street and for the federal government. That was Lew Rockwell, chairman at the Ludwig von Mises Institute.